Okay, well, hello everyone, and I just thought I'd say just a few words around the quarter three announcement for the company this morning. Obviously, the headline growth excluding fuel for the company was 6%, which, even China is only growing at 6.5%, so 6% for Morrisons is pretty good by anybody's standards. The retail like-for-like, and that's that combination of our supermarkets and the online business, what they call retail, as a combination, that like-for-like in the quarter was 1.3%. And what's important about that is the market was looking a little bit back at the previous quarter, which included the Royal Wedding, the World Cup with England's progress, and then the heat wave, which was over that extended period. So that was a very strong quarter. And what we've seen is our like-for-like sales growth at a retail level easing back in quarter three in comparison to all of those factors that were in quarter two. So that's fair enough. So in point of fact, the like-for-like growth the company delivered in quarter three was much more similar to that in quarter one, when we achieved 1.8% like-for-like. It looked like we were heading for that very similar number, and then just the last few days of last week, essentially between Halloween and Bonfire Night, were a bit softer than we would have liked. We took a little bit less than we would have liked, and that took the like-for-like to that 1.3. So if you hear or read about the company in the next day or two, and it says things like, slightly missed expectations, slightly missed consensus, that's basically saying what the market expected us to achieve compared to what we did achieve, and we did come slightly beneath that. If you step right back from that and say the whole year at retail like-for-like, we've actually achieved 1.9% so far, and that's actually ahead of what the market thought we might achieve. So it's a big tick in the box. So as ever, quarter four is upon us, and it's up to us to do the very best we can as a team to make the most of what we've got as we go forward through to Christmas and the New Year, the January sale, and setting up for the next financial year. So in my view, it's all to play for. We have got the completion of quite a number of refits now. We've also got the additional Christmas products for Best, another 250. And then we've been fortunate, I think, not lucky, but fortunate, to win first place in the Good Housekeeping Guide and the BBC Good Food Guide around the Poinsettia handmade Christmas cake, the deep filled Best mince pie, there's a £2 a box, and the free from mince pie. So those are three quite important items, and we're going to be making quite a lot of those in the marketing going through Christmas. Also, the Christmas stuff that we've put out so far has ticked up well on sales, so that's a good sign for the business going forward into Christmas. I think quarter three did feel hard. I think we made one or two wrong turns in an effort trying to do the right thing, control costs a bit tighter, as one or two things were costing us a bit more than we had figured. On the packaging, we didn't do our best work on the packaging for our Market Street departments and so on. So I think we've got to look through that now. We've sorted that out. We're working hard with distribution to get that moving more smoothly, and I think Gary and the team have got some good plans there over these next couple of weeks to really get that as a big positive for the company. So yeah, looking forward to it, and I just want to say a word on what we've actually done in quarter three, as well as the supermarkets. We opened the new store in Acotts Green in Birmingham, the former Sainsbury. That means we've opened 3 new stores this year, so we're back in the saddle of opening new stores with St Ives, Abergavenny and Acocks Green. They've all done well. We completed 29 fresh looks in Q3, i.e. refits, that I know many of you would have been involved with, so thank you for that. I know it's very hard work. We've opened 12 Morrisons Dailies on the Channel Islands with Sandpiper CI, that's the company over there, as a franchise model. And we've opened our first one in Guernsey. We've also opened 5 more Morrisons Daily with Rontech, the petrol forecourt retailer, so that brings that up to 47 or thereabouts. We started deliveries from Erith, which is a huge Ocado-driven shed in southeast London to complement Dordon in the Midlands. We've moved more stores onto Store Pick, so another 6. We're now up to 20 Store Pick home shopping stores. So if you combine Dordon, Erith and Store Pick, we've got 77% of the British public covered with online shopping from Morrisons this year. It's the highest we've ever had, and that now includes Scotland for the first time. We've launched Eat Fresh, which is the recipe subscription box by the team here in the office, which is a big effort by Cutler and the office. And then we've got the Morrisons More app, which is making it much more simpler and digitised to handle the More card and its benefits. And we've launched our organic range, which looks quite sharp in the stores. And then next week, the vegan launch, 39 products, is live, fresh and frozen, and also our Little Kitchen brand for kids. So it's kind of an interesting list, and I want to thank everybody who's been involved in that, and thank everybody who has worked so hard in distribution, in manufacturing, in the office, and of course in our stores over Q3. I know it's felt like quite a tough quarter, but we now need to look forward and see if we can make the very most we can from Christmas and New Year. Along the way, we were voted Supermarket of the Year by the trade magazines, and we take a lot of pride in that, and it's all down to the front line of the business achieving these awards. So congratulations, well done, and thank you.